Hello, and welcome to the Scouting for Growth podcast. Today's guest is someone who doesn't just talk about the future of insurance, he's actively building it. Gil Arazi is the founder of The Spark, a global prevention lab that helps insurers shift from paying claims to preventing losses. And he does so in a way that actually drives profitable growth. He's also the founder and managing partner of Sabine Venture Capital, one of the world's leading insurtech funds backing companies that are reshaping underwriting claims and risk itself. Gil has spent over 2 decades inside the insurance industry as an executive, as a board member, and as a serial entrepreneur. So when he says the model is broken, he doesn't exactly just invent words. He knows exactly where the cracks are. In this conversation, we'll unpack why prevention is no longer optional, how insurers can bend the loss curve instead of chasing it, and what it really takes to move from vision to execution without turning innovation into an expensive theater. Like me, Gil doesn't deal in buzzwords. He deals in outcomes. So let's go. Gil, welcome to Scouting for Growth. Gil, so good to see you, and thank you so much for joining me today. How are you?
Thank you so much for having me. I miss you a lot. We've been working together so many years now, but every time I see you, I'm excited because every time I see you, I learn something new. So thanks for inviting me.
The pleasure is mine. Scouting for Growth has been running out for 4 years. It is a podcast which has actually got 3 million downloads, 150,000 downloads per month. So let's actually use that platform to educate the world. There are a lot of investors listening to it, a lot of transformation leaders listening to it, a lot of scale-up startups listening to it, right? To partly when I talk to people like you, they want to understand your brain. They want to understand how they can talk to you. They want to actually understand how they can build an offering, a product, service, which is going to be relevant for customers first, maybe risk transfer companies like insurance companies, but it's about understanding how technology can change our world. So let's start with some introduction about you, Gil. Who are you and why do we know each other?
First of all, you should know that I'm a frustrated musician. That's my first role. But having said that, now is my 30th year in the insurance industry. I started my career in 1995. And I spent 21 years in the insurance industry as a board member, C-level and CEO of companies, both in Israel and in Europe. And some 9 years ago, I've established 50LV. We're a global VC fund. We invested close to $1 billion in companies globally, mostly in the US and Europe. And we have some significant exits that we have luckily did on time. But not everything is successful, as you probably know. So we also shut down a few companies over the years. But all in all, we are very focused on the insurance industry. We're trying to look ahead. What does the industry is going to bring in the next 5 to 10 years? And I'm happy to elaborate on this later. And also, based on the fact that we work with maybe 200 global insurance companies, we're trying to discuss with them and negotiate with them what do they look at the market? How do they see the market? And what are the discrepancies between what I think and what they believe in? And this is very interesting. It's an interesting discussion. And today I'm here to discuss our new initiative. I don't want to discuss any of our portfolio companies, any of our success stories, because I think I want to have a discussion on something that we've built I'm very proud of. It's a new startup that is not for profit, and is going to drive the industry, hopefully, for better places.
That's wonderful. So non-for-profit. So let's go into the genesis of the Spark. Why did you see a gap in the industry and what got you to say, fine, build the Spark as a non-profit? Remember when I was doing Startup Weekend, wasn't technically a non-profit, it was an org to actually help my industry, insurance as well, to actually learn to work with startups. So what has changed and why the Spark?
Okay, very good. I'm very well connected to both to the insurance industry and the insurtech industry. And when I look forward, and this is something that everybody knows, the old insurance industry was built to cover people and businesses from catastrophes. If you had your ship was broken and drowned, you need to have a new ship. It's a catastrophe. If the house was collapsing because of earthquake, it's catastrophe. So we needed these insurance companies to cover us from these deep catastrophes. And this is where the industry started. Nowadays, in the last 10 years, we have seen huge progress in technology and data and understandings and abilities to predict and to futurize catastrophes on one hand. And on the other hand, we have seen that a lot of our methodologies and data and actuarial data is not responding to the current situation, mostly in catastrophes and NatCat, right? And when we analyze everything, we understood that the industry needs to move from reacting to the claim and to the damage and to what happened into proactive prevention of this damage or systemic risk in a way that will reduce the friction in humanity. So when we thought about the spark, it was like, okay, I'm 30 years in this industry. Let's do something that will change the industry and will leave a mark before I retire. Okay. And when I look at this, we have huge systemic risks that we know how to foresee and maybe reduce. And if we will succeed even in one use case, it will be a great effort for sustainability, for resilience, and for society. So I think this is the major thing here is to bring value to our society.
Critical and missing. So based on what you've said, though, when you think about our sector, Gil, for decades, insurance has been built on paying claims after loss. That is what the industry was made for. And that's, unfortunately, I would say, what customers think the industry is there for too, when buying their yearly contracts. So with disaster trends, and we've seen major disasters over the past few years, cyber threats as well, the AI bubble, which we are going through, is going to bring more cyber threats to all of us. So rising loss ratio. Do you think that the industry has been in denial about its own fragility?
Yes, I do think so. It's not, I wouldn't call it denial. I would call it sitting on, okay, I don't want to use this word, but doing nothing because others do nothing. So everybody is doing more of the same. And I want to give an example because what we have seen in the last 4 or 5 years is even worse. Because if 5 years from now, everybody was afraid of disruption, and a lot of insurance companies were doing things because they thought they are going to be disrupted and someone is going to steal their cheese, right? And what happened in the insurtech industry is since 2021, all this industry has collapsed and a lot of valuations dropped down and a lot of companies did not succeed. And everybody understood that the insurance incumbents cannot be disrupted. And also the insurance incumbents themselves, they understood we're not disrupted anymore. So we can reduce the feet on the gas pedal. We don't need to try some crazy stuff, but we need to focus on profitable growth, not just growth, and let's make sure that you are there. And profitable growth, when a startup company comes to me and says, my solution will solve the problem of loss ratio, I know I will never invest in this company because they don't understand that to prove that you change the loss ratio will take you 10 years. And when you change, you want to change the book and reduce the loss ratio, the ultimate loss ratio or the fully developed loss ratio, whatever you call it, including ALE, without ALE, including that and that IBNR, it will take you 10 years, 5, 8, 10 years at a minimum. So all the insurance companies, they want to have profitable growth. I'm not speaking about loss ratios. Let's take it out of the equation. But all of the insurance companies, they want now to have added value services for their customers. Why? Because of 2 reasons. First, new revenue streams that are not coming with underwriting risks. And the second one is retention, because retention is key. And this is where I'm coming from. Retention, if you tweak the retention a bit, the embedded value of the company becomes much, much bigger or smaller, depends which way you tweak it. So when you have higher customer satisfaction, you have better retention. This brings you much, much higher embedded value to your company. And this is where I'm coming from. When I have solutions that can provide you with added value services to your customers, you can make new revenue streams. And on the other hand, your customers will be happier with working with you, and they will see you as a partner and not just the one that wants to take their money and pay them if at all, if they have claim, then everybody wins. And mostly the end customer wins because he's more protected. So this is the change that I'm talking about.
So when was that? When was the moment you made that statement and you felt, it is enough, we need to change things, we need to adapt the model? When was that moment when you realized we just needed to actually shift things a little bit?
It evolved in the last 4 years when I started to dig in longevity and aging. Even though we're starting in P&C and non-life, 4 years ago, I started learning and we started doing investments in longevity and aging because we believe there's going to be a huge shift in longevity and aging, and the lifespan is going to be much longer, and this is going to have a huge impact on our industry. And when we understood this and we started to analyze what's going to be the impact on our industry, we saw that most of the insurance companies, they don't care about it. And we found some huge, amazing solutions that could really be very good for humankind, where everybody would make money out of it in 10 or 20 years, but nobody wants to touch it because it doesn't make money now, okay? This is where I understood, okay, we need to make this shift and we need to show that we can do things now that will bring impact now and will change this observation of the industry from not taking advancements on prevention to moving towards prevention. It became stronger when I started to look at quantum computing. 2 years ago, we started watching and learning about quantum computing, and today we believe that quantum is going to be operational in the next 5 years, even though everybody says it's going to take longer. I can tell you 5 years from now, we have operational. The impact on our industry is huge, but nobody's doing anything now.
Yeah, considerable. And, I've been fortunate to do some work with IBM and go to the IBM office when they have a quantum computer there. And you can actually see that it is physically here. It's just now being able to scale it and actually secure it and making sure that the negative part of the quantum, and then the processes are not straight, right? The things we used to do, like step 1, 2, and 3, no, with quantum. And it is the same with AI, the workflow processes and I would say guardrail we've built can actually be collapsed. And which takes me to my next question, right? AI 2023, OpenAI and all this stuff, right? There was a fear and then there was a panic, I think, when we thought about AI. And I think 2025, when we reflect on the year as being everybody focusing on AI and seeing how they do an AI strategy and how they can actually play catch up. Do you believe carriers actually really prepared for a future within an AI world? And, I'm very, very fortunate to have been doing some work with EY and Microsoft on the agentic frontier recently, right? You have to look at the real-time sensors. You have to look at the AI. You have to look at the climate volatility. And then you start dictating risk. So what is your lens on the transformation we are going through when, our industry has a lot of data? Let's just be really kind. We have a lot of data used for actual models. I don't know whether they are always the right data, but what does that mean for us?
So that's great. We didn't prepare this, but I just prepared a slide on where we are now at what we called this thing called AI. Okay. So we started with innovation trigger, right? And we immediately in November 2022, they released OpenAI version 3. And we immediately started with innovation triggers around AI. And it was a very hype and very high peak there. and we very quickly moved to the peak of inflated expectations. Okay. That's where we were like maybe 6 or 12 months ago. And this model is a model I very much like from Gartner. It's the slide is mine, but the model behind it is by Gartner. And they have a model called the hype cycle. And we are now, after this peak, we are now going through of disillusionment, which means that it's a very important part in the progress of AI and understanding that not everything that we expected is going to happen, not at the same pace and quality that we expected, but we are now starting to understand what is the difference between this peak of inflation to the disillusionment. And this is not a failure. It's a crucial time and process to evolve later on into the slope of enlightenment and the plateau of productivity. And this is what's going to happen to AI as well. So let's not forget this, that it will take much longer than we expected, but eventually we'll get there. And the reason is because the hype cycle is moving much faster than what we have on the enterprise adoption. Okay, and this is the insurance company, right? So, which means that uncertain ROI. So, if you look at the average company invested $2 million in Gen AI in 2024, less than 30% of CEOs are happy with the results. And there is a problem in implementation. It's very complex to implement. It's very hard to find the talent, and the data is not ready yet for AI. But I think that going back to the previous slide, and I'll stop here, I think that this is the stage we are at, and it will take us time to move to this productivity of the plateau of productivity.
Yeah, we are going through that slope of delusionment. And then at some point, we are going to go into this enlightenment, because now we've worked out how to deal with AI and actually to embed AI in our processes, making sure it's ethical, highly governed, responsible in the way they treat people, because we've still a lot of bias and discrimination, because the data we have already, right, whether it's on the internet or within our organization, is biased. The only way insurance can be actually successful and sustainably profitable is by being biased.
Yes. For example, the data is very much male biased against female. You know that.
I know
It's a gender bias. And you know that all we expected already to see with agentic AI, it will take time. But I think that the near future is going to drive some interesting stuff, mostly on automation of processes within the insurance companies. We already see progress in this, but again, it will take time until the maturity will reach. I think that AI is a very small child when you are comparing it to what quantum computer is going to bring. Why? Because when we are going to have operational quantum and we're not ready for it yet, it's going to change things much faster and much deeper in a way that we even cannot understand what it's going to do to the risk side, what are new risks that are going to be derived out of it, what's going to happen with cyber on all these risks, and on the other hand, all these opportunities of the personalized drugs, the longevity, the aging, which also will be driving very fast forward in a way that will create new risks on the long tail products for the insurance industry. So everything around is going to be evolved.
So looking at this transformation, right, you're saying we are going through that slope, of disillusionment right now. So people are uncomfortable because they have spent so much money on AI. They are not getting the ROI. We got the 95% from HBR. We have the BCG study, which is 88%. I mean, let's say 20% of companies are getting results from AI right now, most are not. But then you actually highlighted, right, we have a talent gap. We don't have the people able to work with this technology. We are still in experimentation rather than around execution, and we need to execute smaller projects. Another thing I've learned in recent weeks is that you cannot actually do agentic on new processes, like what we call emerging risk, you have to start with an existing, really well-known process workflow, which that we can really understand where the things is changing, because a new process with the agentic, you're actually doing new with new rather than doing new with old. So for you, where are executives underestimating the stress, this threat of change?
I want to give you an example. Okay. And this is the example why we need to understand where should we use AI, when should we not use AI. Okay. So in 2023, Google announced the project Graph Networks for materials exploration, and they were working with the AI, and they discovered 2.2 million new structures of materials in the world. It's amazing. Based on what we understood, it would have been taking 800 years for us people to find all these materials, new materials. And we were thinking, oh, wow, this is amazing. We're going to use these materials to protect our homes from fires, to have stronger materials for rooftops, to have many, many new things that will protect us also on the health devices, etc., etc. But when we started to analyze these materials, we found that these materials, most of them are nothing, not enough innovative, could not prove that you can produce them, not functional. And so most of this was a lot of compound predictions, but very few materials breakthroughs. Okay. And this is where we understood that it's not enough to have AI and predictive scale. You always need to have domain expertise. And if you don't have domain expertise connected and working together and actionable insights, then you will never get results, because AI is very, very good in producing more and more and more and more and materials and results and expectations and whatever. But if you don't know how to use it correctly, you just lost it. So I think that's exactly where we are standing now. We're trying to understand. That I can give the AI a question. He will give me so many predictions that I will never be able to analyze. And I will never be able to understand which prediction is good and which is not good. But what I can do with AI that we started understanding is that to start understanding the results, the financial results of this type of analysis. And to give you another example that is good example is, for example, the wildfire mitigation. Because when we started discussions around wildfires, in 2017, a huge amount of wildfires started in California, billions of dollars from 17, 18, 2019, every year now it's growing, it's billions, and it's a huge problem. And we already knew in the past that if we do certain things like fire-resistant roofing, and defensible area spaces around our houses, it's going to help us, right? We knew it. It's not new. But what we didn't know is how to measure these and how it will affect the premiums and the losses that will be reduced out of these things. And when we use AI to build this risk analysis and to understand it, we know how to measure things. And we know that if we'll do this action, we will save $200 in general for all the houses, and for the roof, it's going to save us X and that. And that's why we understood now that, and this is actually working. And this is the spark. How we look at things with the spark is that we can analyze things, we can measure them with the AI, and we understand the impact. So today I know that with this impact, I will save $872 if I use the house with the roof protection and this gardening protection, etc. I know how to change the policy. I know how to give the discount, and I know how to reduce the systemic risk. And this is exactly how we're going to do it at the Spark. This is, by the way, a prevention. This is a prevention story.
So when you start looking at the future, right? When you start looking at the bold stroke, which are going to impact us, what does insurance for you, Gil, looks like when we think about 3 to 5 years from now, when we start looking at it from a prevention viewpoint?
First of all, I think the most important part here is that every person, you and me and everyone that listens to us, has any type of protection gap. And in this protection gap, there is a lot of companies, insurance companies, that are taking some of this gap and protecting us. They need to understand, and we need to understand, that these insurance companies are our guards, and they have a lot of impact on our lives. So they become an impactors. So I believe that the insurance industry need to take this role and to understand, okay, as an impactor, how do I reduce the systemic risk of my customers? Why? Because I have all the necessary and the necessities, I can do that. For example, I have huge amount of earthquakes in Japan. I know how to utilize technologies that knows how to detect these earthquakes on time and to do all the necessary automated shutdowns of factories and facilities in a way that will reduce systemic risk in these facilities. We already know that. We know that we can use technologies that listens to the machinery and understands if the machinery is going to break down or fail before it happens. And we can take this in a consideration and take care of this before it happens. So if we put these solutions into power plants, we reduce the systemic risk of business interaction. Okay. We can reduce systemic risks in so many ways, and we just need to be there just for our customers, for the humanity, to bring the resilience up and to reduce systemic risk down. And this can be done only by prevention, because the risk modeling is changing daily. We don't have enough data. We don't understand what's going to be the next NatCat event. We can higher the premium. We can write more higher reinsurance treaties, etc. But at the end of the day, it will not solve the problem. What will solve the problem is reducing the risk by preventing it.
And that is critical because, as you said, prevention in your thesis can actually drive profitable growth. Not just, cost savings. It's about finding the right balance between the two. And so when we look at that provocation, partly when we know, and we have been in the industry, you've been in the industry for 30 years, I've been in the industry for 30 years. We are living in an industry and working in an industry where, it's risk averse. So it takes time to achieve outcomes, which means when we start looking at innovation, a lot of companies think we are doing innovation theater. We are not moving from experimentation to execution. Very few, the 5,000 insurance companies out there, very few are moving from that experimentation to that execution. So for you, what would be maybe the boldest business model that will stick in the future? How do we move insurers from just paying claims to actually becoming real-time advisors?
Okay. First of all, you remember I told you that there is no disruption. I want to build a disruption. I want to explain. I think that if some insurance companies and some giants will lead some new changes in the new programs that we are going to do together, these programs are going to hit the market in terms of risk modeling, then pricing models, then go to market, which means if I'm, let's take the example I took before. We have hundreds of power plants in the US. They have a high risk on business interruption. If I can reduce this risk and give them an additional technology that will help them, and by doing that, I'm changing the risk modeling of my insurance product, my pricing models will be much cheaper than the competitors. So if I will know how to make this happen, I will do the following. First of all, I will sell much higher amount of premium for these with this new premium, program. I will have, on the long term, I will have much better results on my underwriting because I would avoid systemic risks. And most of the customers will immediately understand. And this is a free market. So I think that if we start this, it's going to be like a flywheel that will drive this change because nobody wants to be left behind. So we need to build the FOMO and we need to build the disruption for the market, which will come not from insurtech. It will come from pure insurance business that they are going to be leaned and supported by mature technologies already proven. Nobody is going to do a POC or pilot or POC With early stage company, we don't know if it will succeed. We don't know if they will know how to deploy. No, everything is already there. We just need to connect the dots together and to drive this resilience through prevention.
It's interesting, Gil, because, you and I started 10 years ago in this insurtech world, from working with big companies, corporations. 10 years ago, I said, okay, it's time for me to give back, work with fintech, insurtech. And those companies need the funding. They need money to actually build the product. So if you're saying that the future of technology is for us to work with the more mature companies, right? The scale-ups,
Yes.
the one proven product market fit, right? How can we make sure that we don't forget the younger businesses? Because every business has been young to start with, right? How do we enable that still?
I think that's a very valid and fair question, which I actually don't have the answer because I want to explain. If 5 or 10 or 8 years ago, we could very easily find a design partner or a pilot partner for early stage insurtech companies, we find it very hard to do that now because most of the insurance companies, they are not looking for early stage companies anymore because they don't want to waste time on deployment, on pilots, and most of the cases it fails because the way from starting work with early stage companies until a full deployment, it's very long. It's a long way. It takes years sometimes, and not all the companies are ready for it. They don't have enough runway. They need more capital. They shut down. A lot of things can change. And by not doing that anymore, it reduces the risk on your innovation efforts as an insurance company. So everybody now wants to have mature technology with a proven company. I think this will bring us a lot of trouble in the next years because not many new insurtech companies are starting to evolve. And most of the newcomers are now insurtech enablers and not companies that are sitting on the value chain of the insurance industry. I think there are very good operative programs that are helping this type of companies. We see, for example, that Deloitte's Lab is doing a lot of things around this type of initiatives. I'm also a mentor at the CDL Wisconsin, which is a great program for early stage companies that wants to build new solutions for the insurance industry. But I think that it's going to be harder and harder for these companies to evolve.
Yeah, no, I hear you. I have no doubt that it's not going to be an easy ride. And what I've seen in 2025, that need to, or that yearn to work with MGAs, right? So when I look at an MGA or an insurtech MGA, it's a company which is going for a very narrow niche products, and they are becoming a company, right? And they are looking for capital from the carrier to actually be responsible, right? As a delegated underwriter to actually, make money for the insurer. And I think those programs probably are still valid, but you really need to find that niche, right? That really niche, using the technology to really understand how value is going to be created. But at the same time, Gil, I'm thinking about technology. You talked about predict and prevent, right? And the role of the human. Hopefully, when we start looking at prevention, part of it is finding ways to make products, services insurable and affordable, right? For the consumer. So that may mean less people. I'm going to be challenging you a little bit now. We may actually have less people within the operation of the insurance company. I don't know. My thesis around AI is it's about augmentation, right? You have the human edge, agent operated model, which is level 3 when you think about the frontier firm model of EY Microsoft. So what does tomorrow looks like when you start balancing that human skill versus that with mentality and then that early stage angle whilst we are building the businesses of tomorrow?
That's very good. I think that I have a good answer for everybody in this industry. And I'm taking the example of underwriters, but it's the same for claims adjusters and everything. So, for example, the human underwriters, they doesn't disappear. They get promoted instead of disappear, right? Why? Because technology will predict risk, but humans will decide what to do with it. It's like, as I mentioned before, you need the human in the loop and you need the guy that is really understanding it. And algorithms are very good at probability, but they are terrible at responsibility, right? It doesn't work. So the future of people and underwriters, for example, is not a spreadsheet experts. They are a risk architect and someone who knows when to trust the model and when not to trust, to challenge it and when to override it. So because risk is no longer static, it's a contextual, it's behavioral, it's deeply human, it changes from day to day. So I think that the answer is very good for these people.
You have built the Spark as a global lab, right? And I love that because, as you know, I've been working for the past few years around commercialization. My thesis has been for the past probably 5 years, as we went into COVID, is how can we help our industry commercialize with ventures? So that was my thesis. So therefore, I mastered the venture client model at the Spark, building an ecosystem where major carriers collaborate for real implementation, no pilot. And I think language is important. So I always say commercial pilot. You pay for the service, right, from the ventures, and the goal is to implement, execute into the operation. And my thesis has always been about operational enablement. I believe that if you do a lot in operation, you can probably shift your business model. We are in risk-averse industry. So what does it take to get, competitors to trust one another? How do we make this happen?
Sabine, first of all, this is a startup. I don't know. To give you the honest question, honest answer, I've been thinking a lot about it. I think I know part of the answer because we decided deliberately to start from the demand side and not from the supply side. And it's very hard to do some collaborative work in the insurance industry. Many have failed. I hope this one will not fail. I'm not sure. But competitors, they don't start trusting each other on the first day, right? What they do, they start by trusting the problem. And I think let's fall in love with the problem, not with the solution. Okay? Systemic risks, climate, cyber, infrastructure, health, all these type of risks, they don't respect the market share. No. The first step is not collaboration. It's a shared vulnerability. We are all vulnerable in this case. And at the Spark, the trust doesn't come from big visions. It comes from a clear boundaries, what we share, what we don't want to share, what we want to speak about, who owns what, and how decisions get made. And paradoxically, structure creates safety. And we have seen this in the past. And this safety creates trust later on. And it's created the antitrust policy and everything that is behind the Spark. The only major problem is the emotional cost of it. Okay. And I think that the most biggest problem here is to admit, I admit I don't have all the answers. It's hard to admit, it's hard to do that. It's hard, it's to listen to your competitors. They describe their pain point and you are pretending that you have already solved these problems and you cannot, you don't want to share that you have the same problem. So it's moving from we versus they to this is bigger than all of us. So we need to be working on this together. And that's not comfortable because collaboration, it strips away the illusion of we are the top of the world, we are the kings, and we are unique.
You're absolutely right. And as you're speaking, I just pull this on from my desk, right? I read this co-petition in 2000 when I did my MBA. And I think, I took that book back a year ago.
What is this?
So the co-petition book is how do you collaborate and compete at the same time? It is the framework around how do you work with your competitors, but still deliver value for your own organization, because this is a very different business model. It is, as you said, a business model of trust, of understanding boundaries. Like in the old time, when people used to fight, there used to be some rules of how people fought against each other. So the gentleman approach to being responsible in the fight, but also collaborating in some aspect. When you think about Gemini, Copilot, Claude, all those guys compete. But have a guess, when you start looking at the way it's implemented within an organization, we can use any one of those models. I use all of them every day. It's a cooperative world, and we need to learn to compete and collaborate at the same time.
Exactly. And I can tell you that we have given a lot of thoughts on this, and we know it's going too hard at the beginning. That's why we have decided at the Spark that we're going to do both collaborative projects and also each one of the members of the Spark is going to have their own one-on-one projects for themselves that are not collaborative. Okay? So it will give the space for everybody to make values for themselves out of the Spark initiative and the Spark program. So we thought about it and we wanted to solve it like this. To give you all options are there.
So my final question to you, Gil, if you could leave every insurer listening to us today a provocation or a dare, what would it be? What is the challenge they must answer if they want to strive in 2026?
That's a very good question. I think I have a simple dare, but it's not comfortable. I think that I want to approach the market and to approach all the big and small and medium companies and say, build one product, one service, one business line where your success is measured by the loss that never happened. Okay. Not by the loss ratios, by the loss that never happened. Okay. So not by the premium growth, not by the combined ratio, by the risk that you avoided or the behavioral change that you did on the lives that, or the lives that you protected. And if you can't do that, then you're not redesigning insurance. You're more of the same. You're just optimizing the decline. So this is the question that every insurer must answer and ask himself and answer. Do you want to be relevant in the world of prevention or efficient in a world that is no longer exists? And I think that the risk, I will leave this, but I think that's my answer. That's my pure answer for this. Just do something good for humanity and for yourself.
Do something good for humanity and for your organization and for the human in general, but also it's about really identifying your protection architects. I mean, I'm listening to what you said, and we are moving into a world where we need architects. It's not about doing strategy, and it's about architecting. And that is a word I use often, when I build the labs is I'm your architect. I am your execution architect, and my duty of care is to build for you the blueprint and the playbook to allow your team to be self-contained when they deliver. So if people want to talk about the Spark, where should they go? How they reach out to Gil in the future?
We have a website called thesparkins.com. We have LinkedIn called The Spark. Everybody knows me. I'm already always open for discussions. We have a very big team that is already working for The Spark, Evie from Wonders Bridge and Orna, and a lot of guys from Aon. Aon is a very, very strong partner for The Spark. We've built this with Aon, with very, very, very strong persons that are joining this. And I think I just want to say for the end that for me, I think the industry needs to understand that the risk of not joining the Spark is much higher than the risk of joining the Spark, because eventually, if people will start understanding and doing things, you don't want to be left out of this. And I think that we already have the right partners to start with that are going to do the huge shift here. It's like Aon and Generali and Allianz and the QBE Ventures and QBE and Travelers. And a lot of companies are now in the process of joining. Let's do this change. I think it's going to be an amazing journey.
Well, thank you, Gil, for joining me today.
Thank you. As always, it was a great pleasure for me. Thank you so much.
I hope you enjoyed this conversation. I would love to wrap up with a vision of insurance as protection architects, not lost reporters. Because the real revolution isn't technological anymore. It is emotional, it is behavioral, and it is strategic. And I will add now that if you enjoyed this podcast discussion, please subscribe to it, share it with a friend or two. DM me on LinkedIn and let me know what you would want me to dive into next. And please leave me a 5-star rating. Your rating and comments are so valuable. I review all of them and my team helps me adapt content to meet your needs. Finally, please connect with me on my preferred channels. I am a B2B go-to-market growth specialist and venture client architect. If you want to know about the venture client model, then go to our website, alchemycrew.ventures, go to the journals, and you'll find a lot of resources there. You will find me on LinkedIn, Instagram, and X.com mostly nowadays, where I combine over 170,000 followers. All information available below on the podcast description summary. Until next, keep on, go and scout for growth.